Hey, good morning, guys. How are you guys doing? Thanks for jumping on the call again, and thanks for any of these viewers out here that are so excited to be with us on another Saturday to figure out how to capitalize on some of the things that are going around here. Just to kind of start us off, I think I'm gonna hit us off with a prayer real quick, just to get the day starting right. But, yeah, Heavenly Father, we thank you for another Saturday. We thank you for another Saturday that we get to come together and just talk about the ways that you are moving in the world, in this country, and through our bank accounts and brokerages. And we just ask that you bless this time, bless the conversations, bless the viewers, and just help us be wise and be good stewards of our money and use these gifts to honor you and your kingdom. And it's in your holy name that we pray. Amen. Cool. Right on. So this it's a little bit of a not really an old article, but we recorded last week on Saturday, and the next day after that, Sunday, January the 30th, this notification came up from the Wall Street Journal, and it was actually about Cathie Wood. And let me actually share my screen, and it just got me thinking. We have not talked about Cathie Wood the entire month, and I remember at points in time she was actually referred to as the queen in our group. And what obviously if
The
you
OG.
the OG, that's right. So this is like a bad picture of her. No offense to Cathie Wood. I don't know why the Wall Street Journal had to put that up there like that. But anybody who kind of follows stocks, anybody who follows Twitters and memes and anything like that, definitely knows who Cathie Wood is. And even if you invest in her, I'm sure that you are experiencing some pretty tough times with the positions that you have with her. So basically, this article is really just about how the fund itself has been struggling. I mean, like all growth stocks have really been struggling over like the past year, and some of them are down like more than 50%, right, from their recent highs. Some of the folks in here that are like big, like investors in her fund are really just kind of like posing the questions like, should we really be buying more? You know, and so it's just very interesting. And so just want to like point out some things about Cathie Wood herself as well. Some of the things that I would like to highlight from her fund specifically is that over the past year, the managed assets have actually gone from 28 billion to 13 billion. And that was just at the time that I was like researching her. I think that it's even more at 12 now. But she considers her investment strategy into super growth stocks. So probably extremely risky. Some other things that I kind of wrote down is that she actually doesn't believe that the interest rates are going to be raised this year, right? Like she thinks that it's going to happen in March and that's it. Like she doesn't believe that anything else is going to happen, and so she's sticking with her strategy with the super growth. And obviously that's definitely against the consensus. Just a little bit of history about her too. She was actually a portfolio manager. I'm sure that some of them, a lot of people know this too, but her reputation as a portfolio manager is that she used to be the best performer in the bull markets. She used to outperform the markets and all of her peers. But in return, she also overwhelmingly underperformed in bear markets. So when times are really good, she was amazing. When times were really bad, she was just terrible. The last thing that I want to point out about her, and this is just like for me, but she is like a big Christian. That's her ARK fund is actually named after the Ark of the Covenant. She has like a whole story about that, and like so I'm sure that she's like a very great person, not because she's just Christian, but just I'm sure that she's great. But some other things that I kind of want to point out about the ARK and everything is that obviously you can go to her website. She does have 9 different ETFs. The ones that I'm going to be speaking about today are really just the active ETFs, not the index ETFs. I hate to say it, but I didn't really do a deep dive. I was in the lab this week looking at these three, just these six, because I think those are like the most popular there. But I'm pretty sure, and I could be wrong about this, but I'm pretty sure that you can actually sign up for like her newsletter. You will actually get emails letting you know when like she's buying and selling a certain position. So that's kind of interesting that she does that, especially if you're more interested in the constituents that she's buying into. Um, that way you kind of actually learn to kind of the way that she thinks and like some of the strategies that she has. But with all of this being said, I really wanted to dive deep into some of the analyses that I did. So this right here, and I can go to data and refresh it because I'm pretty sure that this is as of yesterday, the 4th. This is the current price of these six funds that she has and the prices. And these are the 52-week highs actually. And so ARKK is actually down 120% from its 52-week high, 138% for ARKG. Some of the others, like basically that what means is that if you would have bought there, clearly you would have lost over half of your investment with that. So very tough times for ARK right now. But it got me interested into looking into how we even got here. And so what I was kind of looking at was like from the IPO dates all the way to December 2020, because I think that's December 2020 was definitely her highlight year, but I'm sure that was the same thing for all of us, right? So two funds started in September of 2014, two of them started in October, and this not necessarily a fair, accurate for me to say like September 14th through the 2020th, December 2020, because ARKF wasn't on the NASDAQ or New York Stock Exchange. I'm not sure which one it trades on. I'm sure NASDAQ, but that was actually in February of 2019. But these were actually the opening prices. And I was comparing them to the analysis date of December 2020. And so you could see these are actually the amounts that they closed on December 31st of 2020. And so that's about a 6-year difference in between 2020 and 2014, and 1 year difference between those two, of course. So that means that the year over year return, if you would have bought it on the IPO date all the way to December 20, you would have been making 47% a year, theoretically speaking, right? And then 105% a year, 85%. And obviously you would have gone up almost 150% on ARKF. So like you can see like why it's like bringing a bunch of noise and a bunch of attention. But if we look at the chart, this is actually what it looks like. And you can see that it's well over 400%. If you would have bought it from day one, probably be a little bit less if you would have bought it during the COVID crash. But again, like this is like a huge spike. So yeah, it's a very interesting chart, right? But what's been happening lately is a different story, right? So I'm looking at it from the first day of 2021, and I can actually remove that. The first day of 2021, except for ARKX, which actually started in March of 2021. These were the opening prices on those days, and this would have been the IPO price. And so I'm looking at through Wednesday, because that's when this analysis was done. But this would have been the close, actually. And so if you would have bought on the first trading day of January 2021, this is how much you'd be down: 16%, 37%, 40%. And so if we look at this chart, it tells a different story, right? The first couple weeks, I mean, the first month really would have been really nice, right? And then this is when GameStop and all that kind of stuff happened, right? And that I kind of blame that for some of the positions that I've been losing lately. But this is what the combined chart looks like overall. So you can see like you actually would have lost like almost half of your gains. I mean, this is house money, right? From right here to right here, this is house money. So like maybe you don't have to be too upset, but I just wanted to bring this to you guys' attention and just kind of ask like, what are your thoughts? Like, do you guys own it? I mean, I have two of her ETFs, so I'm definitely not feeling too hot about it, but I do have some plans myself, and just for anybody who's actually listening to what they can actually do as well if they're in the same position as I am. But we can talk a little bit more about some of the opportunities and take advantage of this current situation. But I guess from you guys, do you guys think that this actually is an opportunity? Do you guys think that it's not? Do you guys think that Cathie's washed up? Or like how are you guys feeling about her funds? And we can even take a look into her constituents and everything and see if there's something going on there.
Yeah,
But
in 2019, I credit Cathie Wood with being the person who put Tesla on my radar, officially. I had been looking at Tesla in 2014 maybe, but it wasn't until 2019 when I heard someone kind of matching what I was trying to understand about Tesla, how they were going to change the way we drive, transportation, all that stuff. When I heard that, when I heard that video or that interview on CNBC, that triggered my desire to just buy Tesla. And back then, it was I think it was like 178 before the split. Obviously, if you know ARKInvest, if you know Cathie Wood, she has a 30-40 year view, and this is why we call these investments. If you look at the short term, yes, I mean anything could happen in the short term, but overall, if you're looking to save money for your retirement, you don't have to worry about these kinds of moves because they're going to happen. And like you're very accurately pointing out, Josh, I mean, overall, I mean, the fund is still outperforming since it was generated. So listen to Cathie. She says 20-30 year view. This is just 1 or 2 years. I agree. If you can take the risk, go ahead and take it. I know we're talking to young people, and the fund is 40% down, yes, but look how it performed prior to this. So I don't have too much worry about Cathie. She knows what she's doing, and it just follows. I mean, after a great run, there's got to be like some sort of break. So this is what we're seeing at the moment.
Yeah, a couple of things like stood out to me, Josh, when you were like talking about Cathie Woods. One was just that her portfolios like have outperformed the market whenever in like a bull run, but when there's like a bear market, her portfolio tends to underperform the market, and that to me seems symbolic of maybe like a leveraged like approach that she has. Like the sort of stocks that she is investing in, it's almost like a leveraged version of the market in that sense. And so if you were to look at, say, like right after the pandemic like started happening in 2020, like ARK ETFs like eventually began like soaring much, and that started outperforming the market by a wide margin. But now that we are like seeing like a significant pullback across the board, ARK is beginning to suffer. And I think one key thing that I've been learning over the past year is just that it seems counterintuitive, but it's that being successful in the stock market isn't actually just about outperforming everyone. It's about being able to outperform everyone consistently. And so that will also depend upon like what's like your time frame. So if you're only looking to outperform somebody in say a year, you probably won't be able to invest in something like one of the ARK ETFs, because if there's like a year where there's a pullback, you basically won't be able to achieve your goal. If you do have like a 30 or 40 year view, and you are able to invest in really, really innovative things that are going to change the face of society for the long term, like say for Tesla, EVs, then I think ARK will probably be something that is for you, because maybe you're young and you can wait for 30 or 40 years. But for someone who maybe can only wait maybe like 5 or 10 years because retirement is more quickly approaching, ARK innovation ETFs, like the ARK innovation into ETF, may not be something that is conducive like to their particular portfolio. And in addition, I think it's also a little bit more difficult to analyze like in Cathie Wood's ETFs in terms of that longer term view, mainly because also like the Sharpe ratio is currently not favorable, but it has been favorable to them in the past. So currently, the Sharpe ratio for the ARK Innovation ETF is negative 1.22, and that's simply because the performance as of recent has been lackluster, just because of the overall market pullback. And like I said before, whenever there's like a bear market, not that we're in a bear market, but whenever there's kind of like a significant pullback, her portfolio will be significantly affected, more so than the average market. So I think one thing to consider is just how risk averse are you, how long you can wait for success. And it's still a little bit murky, for me at least, as to figuring out what's like the longer term Sharpe ratio for these ARK ETFs, because the innovation takes time, but once it actually gets going, it will have a huge impact on like on her portfolio. And I think it still remains to be seen whether or not long term the ARK Innovation ETF and her other ETFs will prove to be more efficient in terms of modern portfolio theory than many other ETFs that we see out there, like say, for example, the Steeple SPY. So in general, I think it depends on like how long you can wait for success, but it's crucial not to take a very, very short-term view when it comes to analyzing any particular investments.
Yeah,
You gotta stay long.
I think that's a key. You have to wait to be successful when it comes to investment. And if you can bring that chart back up, Josh, if you look at when the fund was started back in 2014, that would have been 6 years that you had to wait for it to see some crazy, not crazy, but some sizable returns. So the only people who really got burned at the moment is those people who, here in 2020, who are trying to make a quick buck. Those are the people who got burned. If you bought in 2014, you're fine. You know what I mean? Because it's still a great return. So that's the whole point of investing, waiting, not trying to make a quick buck. Overall, the vision for ARK is good. So I'm bullish on that one.
Yeah, I mean, it sounds like both you guys are kind of interested in almost kind of taking it like as an opportunity. So, I mean, kind of like what you guys were both kind of saying is that each person kind of has to visualize and think about their own investment horizon. For me, I could tell you, like, I own 2 of her funds, but kind of like you were saying, like, I might need that money like within like the next year or two. And so what I was really kind of thinking about doing, and this might even actually be a conversation more for the November time, is that I was thinking about just holding on to it for the rest of this year, actually up to the end of this year, just kind of seeing how it goes, right? Because like you guys were mentioning, like once when things turn, she might be actually doing extremely well, right? And so if it doesn't do well, I think by the end of this year, I think I might just take the tax loss. Again, like taking a tax loss isn't as bad as it sounds, right? But I think that's what I would would you even guys encourage that for like some others who are kind of like looking? Because for me, like I say it every year, I've always been trying to like buy a house, but because I kind of need this money, you know what I mean? But like you guys were saying, like she thinks way far into the future, I suppose, right? Maybe she's justified like with 2020, but like you were saying, like it's going to take like a little while for these things to really kind of materialize.
Yeah, I mean, if you draw like that trend line from the bottoms in that chart, the price that it's currently at fits the trend. So I think it has seen enough downward pressure. Maybe it's it can see a little bit more, but then I mean I think it's good to go.
Yeah, cool.
And Josh, which ARK fund is this one? Is this ARK Innovation?
Man, this is actually all of them together.
Oh, overall.
So
Okay,
analyzing analyzing the entire fund, not just like one specific one. And probably put just a $sign there. But yeah, and so speaking of that, I think that's what my play is really going to be. I don't think I'm really ready to buy any more of this. Just personally, I don't know if I would like really encourage anybody unless they're willing, like you were saying, to wait that long to do it. But the only other thing that I'll kind of point out is that lately as in like this week, everybody just wanted to start talking about her and like having all these articles. But I found this other article, the last one that I want to bring up. It's just some lessons that we can learn that she would actually kind of oh my gosh, I can't actually view it. But I'll put this link in the description. I think I'm having some trouble. Earlier I was able to read this, but what a fail on that. But
Yeah,
I'm sure that we can.
When you're doing good, you get pressed, and then when you do bad, you also get pressed. You know, you get pressed. So it's just the name of the game.
No, yeah, definitely. And just want to point out one thing too that may or may not be an opportunity, but you can actually short her funds with total capital short innovation. So doing like a quick search on this, like they literally just like it's an anti-ARK ETF, and it's actually been doing pretty good. 5 days it hasn't been doing too good, but the past month it's been up 13%. Past 6 months been up 50%. Obviously, right? That kind of vouches the chart that I actually made. Year to date, still doing pretty good. And so just another thing that that's something to look into. You know, not necessarily saying that shorting anything is good, but just thought that was interesting for anybody out there.
Yeah, there are some people who are long, like in the shorts. From those like I'm shorting ETFs. Personally, for me, those haven't worked out so well, just because it's very difficult to time the market to figure out when, like maybe Cathie Wood's like stocks are going to go up once again. So I would say shorting is definitely for an advanced investor who has a very, very strong conviction that that particular stock is going to go down.
No,
And you would also be shorting Elon, and you never do that.
that's a good point.
Elon.
It's a very good point.
Elon's a magician. You never know what rabbit he's going to pull out of the hat next. So it always like, yeah, I've never bet against him, to be honest with you. It's just a scary thing to do so.
Yeah, definitely. But thank you guys for your input and letting us know how you guys are thinking and feeling about ARK Innovation. Any last words that you guys have?
Only a few. Stay long, stay green.